This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Imports of Iranian crude have been flowing into the port and refining city of Dalian since late last year, tanker tracking firms and trading sources said, helping sustain the country's purchases of the oil at near-record levels. The shift has happened as demand for Iranian crude from small buyers in the independent refining hub of Shandong province has waned in the face of deteriorating refining margins, squeezed by higher crude prices but weaker than expected fuel demand, traders said. Iran, including its oil, is subject to U.S. sanctions, reinstated in 2018 over concerns about its nuclear program. But China did not stop buying Iranian oil, with margin-driven independent plants filling a vacuum left by sanctions-wary state firms, Reuters has reported.
Mexico is seeking to import more motor fuel for next year than it had previously planned, to compensate for delays in the startup of its new oil mecca refinery, half a dozen traders said, marking an about-turn by state energy company Pemex. The purchases for next year signal that the refinery would not be ready anytime soon, a damper on the legacy of outgoing President Andrés Manuel López Obrador, who commissioned it after he was elected in 2018 to wean the country off expensive imports. Pemex, the most indebted among peers worldwide, is a major crude producer but relies heavily on gasoline and diesel imports because its 6 aging refineries struggle to process its heavy Maya crude, producing instead record amounts of fuel oil.
Moving on to the top news in the energy sector.
Slovakia said on Friday it had offered a technical solution to Ukraine to restore stopped Russian oil supplies to Slovak and Hungarian refineries, after warnings that a partial halt could lead to fuel shortages as early as September. Eastern European Union members Slovakia and Hungary have been hit by a stop in flows from Russian group Lukoil via Ukraine after Kyiv imposed sanctions on the company, pressuring Hungarian and Slovak refineries that are owned by Hungary's oil and gas group MOL. The dispute has shown how some EU countries still depend on Russian energy more than 2 years after a decision in the bloc to stop oil imports following Moscow's invasion of Ukraine.
Oil futures fell about 1.5% on Friday, finishing the week lower on declining Chinese demand and hopes of a Gaza ceasefire agreement that could ease Middle East tensions and accompanying supply concerns. Brent crude settled down $1.24, or 1.5%, at $81.13 a barrel. West Texas Intermediate crude ended $1.12, or 1.4%, lower at $77.16 a barrel. For the week, Brent was trading down more than 1% while WTI fell beyond 3%. Data released last week showing that China's total fuel oil imports dropped 11% in the first half of 2024 have raised concern about the wider demand outlook in China. Next, we have the top news in metal markets. Dalian iron ore futures snapped a 3-session slide on Friday buoyed by fresh stimulus from top consumer China, but posted a weekly loss amid concerns about demand from the ailing property sector. The most traded September iron ore contract on China's Dalian Commodity Exchange ended daytime trade 1.5% higher at 779 yuan, $107.45, a metric ton. The contract was down 2.75% on a weekly basis. The benchmark August iron ore on the Singapore Exchange was 1.94% higher at $101.85 a ton, as of 0715 GMT. It has fallen 4.41% so far this week, heading for its sharpest weekly drop since June 7.
Copper prices were on track for a third consecutive weekly decline on Friday on concerns that a return of physical buying could be short-lived in top consumer China as the economy remains sluggish in the absence of significant stimulus. 3-month copper on the London Metal Exchange was down 0.1% at $9,107 a metric ton as at 16:05 GMT. It was down 2.2% for the week. More Chinese copper consumers returned to the market after a tepid 2 months, attracted by prices that had retreated by 17.8% from their record high in May.
We will now look at the top news in the agricultural sector.
Chicago Board of Trade's soybean and corn futures plunged on Friday but notched weekly gains, as weather forecasts indicated positive news for crops in the central United States. Wheat dipped again as strong U.S. spring wheat projections and cheap prices offered by Black Sea exporters outweighed the impact of rain delaying and damaging West EU harvests. We're seeing the bull conviction that we had here through the early part of the week just not able to carry through and extend the recovery rally in front of the weekend, said Terry Lynn of Lynn & Associates.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.